People often talk about how to make more money. So things like side hustles, investing, things like that. But you hardly ever see the sort of boring side of what financially responsible people do. And it's not everything just to make more money, right? Because you could make a lot of money and then spend it all and you'll just be in the same place that you were. So I wanted to talk about this sort of boring, behind the scenes, responsible finance stuff that financially responsible, wealthy people do with their money. Well, I should separate that actually. Both financially responsible and wealthy people do with their money, because you could be financially responsible, but maybe you're not wealthy yet. So why does this matter now? It matters because a lot of what we see online in terms of financial content is sort of centered around growth goals. It's centered around sort of the glamorous stuff, but financial stability is kind of what lets you sleep at night. So I just wanted to make sure that we have the financial fundamentals covered. Now, the first thing to talk about is protecting your income. So financially responsible people protect their income. They treat their income like an asset, because it is. And there are three things I wanted to mention under this sort of income protection asset, okay? So the first will be the most obvious one, which is insurance. Because insurance isn't sexy, but it is so necessary. Whether we're talking, health insurance for a trip, I had a friend recently who went to another country and fainted on the bus and got hit with a 5,000 euro bill. I was about to say hotel bill. With a 5,000 euro hospital bill because she didn't take out insurance because she didn't think anything would happen. Like, to me, health insurance when you go abroad is a must-have. Even though she was only going to the next country over. It's not something I could ever consider not getting health insurance when I go abroad. You also need to think about income protection insurance. So think, what would happen if I lost my job, okay? This is especially important if you have a mortgage or if you have children, etc. There are insurance policies that you can take out that should you be made redundant or should you suddenly fall ill and not be able to work for a very long period of time, they will either pay off your mortgage, there are options like that, or they will help you out. There are so many different policies, and it's so important to have that in place. Like, too many people become homeless because they didn't have this kind of protection on their income and they were defaulting too long on their mortgage because of illness or something else. And it is really important to think about this, especially if there is only one person in your household who is the sort of bigger breadwinner, if that makes sense. So firstly, if one of you makes more. Secondly, if you are the only income earner, or if the majority of the bills fall to you. I know that insurance feels like a massive pain because I hate it. I absolutely hate insurance because most of the time it feels like money just down the drain. And there are, pieces of insurance that maybe you don't need, I know 3 people actually, including myself, who, for example, were offered insurance on their electrical appliances, such as a new induction hobs and stuff like that. And we declined it because we were in a position at that time to be like, I'll just buy a new one if something happens, right? Especially since, I lived by myself. I didn't have any animals in that apartment. Like, there wasn't much that was going to happen to it. And in the really unlikely event that it did, I was in a position where I could just buy a new one. But there was insurance that, okay, it's a bit of money every month, but actually, should the worst happen, it will be far worse. So just consider it. Now, the second thing I wanted to mention is, have you ever thought about what would happen if you died and you didn't have a clear plan for your wishes? I know it's not nice to think about, and it's something that so many of us put off, especially if we are young. I'm guilty of this. because we don't think anything will happen to us, similar to what I said about my friend and the fainting on the bus abroad. But unfortunately, I've been seeing a lot of young people passing away recently. And the reality is that having a will isn't just about paperwork, it's peace of mind for the people that we care about. Now, normally writing a will means spending lots of money and tackling so much paperwork, confusing forms, etc. But this month, so the month of October, if you are watching this in October, charities are stepping in partnership with Octopus Legacy, who are a leading estate planner, if you have heard about them, to make it not only easier, but free. Essentially, the charities cover the cost of a simple will up to £150. So you can get a simple will for free. Or if you need a will with the trust, then you can get it at a discounted rate. Now you have the option to sort your will online, over the phone, or face to face. Now you might be wondering how. Why would charities pay for you to do your will? And the answer is that charities hope that you might leave them a small gift in your will. But there is absolutely no pressure to do that. Just a nice opportunity to protect what matters most to you and make a positive impact at the same time. Now, if you haven't made your will yet, then October is the perfect time to do it. And if you want to check out the offer, then the link is in my bio. You want to essentially protect what you've built, even if it's not a lot, instead of just hoping that nothing ever goes wrong. Because yes, most of the time things won't go wrong, most likely. But what if they do? Are you going to be the person that regrets that you didn't take out a £20 a month insurance policy when you lose your job? Are you going to be the person that leaves your family with a potential headache when you pass away? These are things that, even if you don't have a huge estate, you should think about doing, because you never know what will happen. You never know what the rule changes, the regulation changes will be in the future. And you can always update things like your will as you get older. So as your situation changes, your circumstances change, you can always update it. Now, the third and final thing I wanted to mention when it comes to income protection is multiple sources of income. Because if someone is financially responsible, they will not have one source of income. Because similar to the income protection insurance, if something happens, you don't want to be left with no income. So most sort of financially responsible people, and especially wealthy people who have built up their wealth over their lifetime, so I'm not talking about, old money type wealth. I'm talking people who have worked really hard to get to where they are. They have multiple sources of income, and it's really important to do that. And 100% this counts as a sort of a form of income protection. Now, the next thing is they build safety nets. So wealthy, responsible wealthy and or financially responsible people build safety nets. Now, safety nets are more than just a basic emergency fund, because that is what it is in essence. You want to have 3 to 6 months of an emergency fund. You want to plan for chaos. You want to plan for the unexpected to happen, but it's more than just that. It's essentially, you need to think about it like a mindset cushion, a mindset peace of mind in a way. You are creating a financial shock absorber. It might feel dull, but what you're essentially doing is a form of self-respect for yourself. You're not saving for what ifs. Don't think about saving for what ifs. Think about it helping you to create the freedom to make choices without fear, to change your career if you need to take time off if you need to start a business if you want to, And the other thing to mention in here is that diversifying income kind of comes under this as well, but obviously I've already covered it in the first point. But actually what you might want to think about, if you are a financially responsible person who won't overuse this is to keep some sort of access to credit. So for example, make sure that you have an overdraft available set up with low interest. Make sure that you have a credit card available that you can use should anything go wrong, because what if you have a major unexpected cost? You don't want to be in a position where, for example, your emergency fund isn't enough, and you want to be able to very quickly pay for whatever it is and then worry about paying it off. But obviously this needs to be done super responsibly, so you're not just using it for whatever purchases. Okay, so the third thing that financially responsible people do with their money is automate the boring stuff. Now, when you automate your transfers, you have less things to remember, less things to think about, and fewer decisions to make, which I'm sure you've heard of decision fatigue. There are a lot of very wealthy people who avoid decision fatigue by doing things like wearing the same t-shirt every day, you know, just the plain black t-shirt. The same goes for your finances. You don't want to be in a position where every single month you have to make decisions to transfer money to your savings, to your investments, to your debts, whatever it is. You don't want to have to decide, what am I investing in this month? What am I doing? Setting up that automation straight away means you can forget about it and sometimes be pleasantly surprised. Like, I know people who, this isn't exactly on this scale I'm talking about, but for example, they set up the roundup features in their banks, their applications, things like that. And then they forget about it because they don't even realize this money's coming out of their accounts. And then when they check it a few months down the line, they are pleasantly surprised. So this is definitely something worth doing, especially sort of setting up the direct debits to go out straight after payday so that you don't even see that money in your account. You're not tempted to spend it. You want to, feel like a broken record, spend what is left after saving, not the other way around. Good systems beat good intentions every time. Just remember that. Now, the fourth and final thing that I want to talk about as a heading is people who are responsible financially do a very regular financial health checkups. And I mean, I'm sure that generally wealthy and responsible people also do that with health, you know, health checkups regularly. You want to do the same with your finances. And I'm not talking about keeping a monthly budget, which I go on and on and on and on about all the time. Yes, that is also true, but I'm talking like a proper financial deep dive into your state of finances. Once or twice a year, they check what's changed. Has anything changed in terms of their goals? Has anything changed in terms of their income, their expenses, their insurance policies, will updates, you know, things like that. They review everything from start to finish and then make decisions eventually to move things around or change things. Most sort of normal people just look at their finances when something's wrong. When they realized, oh no, I have no money, where has it all gone? Or something's happened, something's wrong, I need to figure out what's happened, or I need to figure out how to deal with this situation. But responsible people will want to prevent issues before they even appear. So by doing these sort of regular financial health check-ins, you can catch things before they become a problem. Sort of how a health check will help you find a problem, hopefully, before it becomes a bigger problem. When was the last time? Tell me in the comments, please, if you've made it this far in the video. When was the last time you did a major financial health checkup? In summary, being responsible isn't about having lots and lots of money. It's about using what you have wisely and intentionally and protecting it and making sure that you are doing everything you can to make your money sort of go as far as it can for you. Money confidence doesn't come from being rich, it comes from being ready. Essentially, these are almost invisible money moves that no one talks about, but they make a world of difference in the long term. Because yes, income protection might not change your life right now, but if anything happens, it will. Having a will might not change your life, but it might change the life of someone you love if something happens to you. Knock on wood. Doing a financial check-in every few months might not be glamorous, might not help, but if it makes you realize that, for example, something is wrong or something is changing and you catch it before it becomes a problem, then it will change your life. So yeah, let me know what you think. Let me know if there's anything you think I have missed in this video, because those are the things that I'm thinking from the conversations I have with people sort of come out. And yeah, thank you so much for watching. See you next time. Bye.